Okay, this is Brian Stoll for Timing Strategies, Monday, November the 12th. And instead of going over everything that happened, I'm sure everybody knows that if you're watching this by now. I just want to cover our positions, what we're doing from our October 30th time frame. We were short up there on October 31st. We did get long on the 5th of November. Trading back up, looking for a range test of that high, did not get it. Instead, if you refer back to our previous time frame of our October 29th video, we did have the probability that this market can come back down and test these lows. We are getting that right now. Okay, now how deep is this test going to go, and is it even going to be a test, or is it just going to be a sell-off? Well, you know, fundamental reasoning aside, they got the FASB 157, blah, 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 mark to market, mark to myth, you know, all the level 3 subprime SIVs that are sitting out there. This is a make or break point. We can come down to at least, or at the most, what I'm looking at is that 145.5 level. If that breaks, even if we get below the high of that low bar, the lowest bar right there of whatever that price is, of 143, that is questionable, very questionable. My opinion, and this is opinion only, we are now in a bear market. What I look for is, again, potentially the test below that flush out of the 143.5 all the way down to the 141.5. I'd like to see it hit that 141.5 level right down here, and then head back up somewhere up to that level of the 147.5, all the way up to, you know, who knows, the regression line towards the end of the year. But in my opinion, from there, based on our models, our longer term models, look to be a seller anywhere on a way back up to that 147.5 level. We in the system, we were long 60%. Well, we were long 30% there. We got long 60% down in here also, so we added into the position. Don't like to add to a loser, but unless that's part of the plan. The trading strategy and risk management defines that. We did get long. Instead, we went flat here for our long-only models. We went flat today. We went short 30% down here as of today, looking for a test of that lows. Somebody told me a long time ago, a very, very credible trader back from Chicago. He's a legend, actually, back in the commodity bull markets of the 70s and 80s, and still, is that, you know what, when you're looking for the rally back up and you don't get it, you don't want to buy the dips, because if it rallies back up, anybody's easy to get into a loser. Give you a little more detail on that statement. But so again, we are flat in our long only models. We are short in our long short models, 30%. Yes, we could get, and like I said, a move back up into those range of you know, the 144 half, 147 half, the 150 half. But at that point, you know, if we get that, we'll see. I certainly don't want to see this low get broken all the way down, because that low of August 16th is, by all definitions, significant bear market thresholds, and we'll keep an eye on that. But you know, that's again remains to be seen. On another note, side note, what I'd like to point out here is the OIH. Shoot. Okay, that's a spread chart. Let's go to the weeklies anyway. OIH. You know, for those of you that are interested in Idiot Wave or Elliott Wave or whatever you want to call it, I call it Idiot Wave because there's so many idiots out there. They do have their redemption and their value. As we saw today, we got a 161 extension of that 2006 high to the 2006 low. And I did not think that we would see that type of sell-off today, but you know, here it is. And if you look at the XLE, same thing. XLE taking out that high of 127 on the projection for this year, and we got this gap down. That is ugly, my friend. This, in my opinion, signals deflation. If the oil markets and the oil stocks, and you know, not to mention the gold market, look at the GLD real quick for that matter. Same thing with the GLD, putting in the top. All these oil stocks, metals, mining stocks, metals themselves and oils look to be putting in a very significant top. And from there, if that gets traction in the oils and the metals and everything else start to deflate, and the dollar starts to take off back to the upside, Well then, well, where are we at? Nope, sorry, wrong symbol. TX. No. If the dollar starts to take off to the upside, today we had a very strong reversal, and it's not showing up here. Let me go to the times. Today we had a nice big bounce up today. The biggest range expansion since we had in October of the 22nd, actually a little bigger. So if the dollar starts to reappreciate, that's going to put heavy pressure on just about everything, in my opinion, the S&P included. So we're going to take it day by day. Again, we're short in our long short models, 30%. RIDEX end of day, we're flat in our long only models. Keep you posted. Please send us an email or give us a phone call, 1-800-675-2131. Look forward to your comments and feedbacks. Until tomorrow, this is Brian Stoll for Timing Strategies, Monday, October 12th. Have a good night.